Morning, Steve Freed in Chicago with the morning grain comments. We had some higher closes on Friday in anticipation of the Pro Farmer Tour this week, and also a little bit of concern if it doesn't rain over the weekend in the key areas, the prices could go higher. But the rains did fall. They started in parts of South Dakota and Nebraska, moved into Iowa, southern Minnesota, and central Illinois, Indiana, and Ohio crops also got a drink. Prior to this, we were expecting today's crop ratings to drop 1% in corn and beans, and we'll be watching the tweets from the Pro Farmer as they start in South Dakota with one group and Ohio and another group, and meeting Thursday in the middle to come up with a U.S. average corn and soybean pod count. So we'll just see what they have to say, but in general, the market's on the defensive. We've got corn down 6 cents, wheat's down 2, and beans are also down about 6 cents. And when we kind of look at the technical side of the market, again, funds right now, we've got them long, maybe 5,000 wheat, 35,000 corn, short 74 beans. But if we, in the corn, take out the recent low, we could go test 363. Wheat will follow corn and could go back down and test 440. And in the beans, we could trade back below 860 and maybe retest contract lows at 820. As far as news from the trade issues, yesterday a lot of the administration was on TV yesterday, number one, trying to say we're not going into a recession and our economy is strong. And number two, we're working on a trade deal with China. The problem is that I don't know if China is working on a trade deal with the United States. A lot of people still feel they will not try to get a deal until after the presidential election. Weather-wise, the next 5 days, looks like we've got a bullseye of rain falling across Iowa. The 11 to 16 day calls for below average temps and below average precip for much of the Midwest. So lacking any heat probably helps the crops and kind of stabilizes them, gives a little bit more credence to the USDA numbers that came out in August. So now we'll just see what Pro Farmer has to say. Interesting tidbit, a lot of money has been moving out of the commodity market over the last month, but it's interesting that in the end of July, managed money totaled $350 billion, whereas last year at this time it was $349 billion. And the index funds, they had $229 billion in ag commodities. Last year it was $235. The peak was 2012 when managed money had $420 billion in the ag commodity futures. So the recent low was $150 billion in 2015. So money's moving in and out, and we'll be watching the Fed action. We'll be watching any signs of the economy. We'll be watching any U.S. and China trade news or tweets of the day. And we'll be watching the tweets of the Pro Farmer Tour. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.